Hello traders everywhere, Jeremy Lutz coming from the digital studios of Market Club, and I'd like to welcome you to the Santa Claus slump. Typically you hear a lot of hype around a Santa Claus rally this time of year, but it's looking more like we'll get a Santa Claus slump as volatility has been intense this week. And just 1 week after the indexes managed to break their losing streaks, that momentum just couldn't be continued through. As you can see here on the S&P 500 chart, we had that week last week where we gained 3.82%, breaking a 2-week losing streak, but we're right back down, losing 1.94% this week, closing at 4,620.64, giving us a chart analysis score -70, indicating that we're still in a true sidelines position for the S&P 500. Key level to watch would be 4,731.99. A move above that level would issue a green weekly trade triangle, indicating a move back to a long position. Take a look at the U.S. dollar. Bounced back after finishing relatively flat last week, up about 0.6%, trading at 96.66 with a chart analysis score +85. So we are on a strong uptrend still for the U.S. dollar. Key level to watch would be 95.51. Move below that level would issue a red weekly trade triangle, indicating a move back to a sidelines position for the U.S. dollar. Dow Jones did, in fact, give us a green weekly trade triangle this week. We'll switch to a daily chart to see it. Triggered yesterday at 35,982.69. However, we did have that fall down today of 1.48% or 530 plus points. Chart analysis score is a +55, indicating that we're really in a sidelines position for the Dow Jones, even though we did get that green weekly trade triangle. Switch back to a weekly chart, and as you can see, down 1.68% this week at 35,365.44. Key level to watch would be $34,006.98. A move below that level would issue a red weekly trade triangle, indicating a move back to a sidelines position for the Dow. Take a look at the NASDAQ, following the other two indexes, down 2.95% on the week. The biggest loss of the three, finishing at 15,169.68 with a chart analysis score -70, indicating that we're still in a sidelines position for the NASDAQ. Key level to watch will be 15,833.11. A move above that level would issue a green weekly trade triangle, indicating a move back to a long position for the NASDAQ. We had a changeover in the crude oil contract. We're in the February contract now. However, chart analysis score is -65, down about 2.2% on the week, trading right about that $70 a barrel level. Key level to watch will be 69.70. Move below that level would give us a red daily trade triangle, indicating a move back to a short-term short position for crude oil, which would push the chart analysis score back to -100. Take a look at gold, kind of bouncing all over the place this week, is up about 0.8%, trading at 1,798.70. However, chart analysis scores +65, indicating that we're in a sidelines position for gold. Key level to watch would be 1,775.70. Move below that level would issue a red daily trade triangle, indicating a move back to a short-term short position for gold. And we'll back out, take a look at Bitcoin. Currently down right about 1,000 points on the day, down 4.85% on the week, trading below 50,000 at 46,966.89 with a chart analysis score +70, indicating that overall we're in a sidelines position for Bitcoin. And we'll actually take this and just real quick and put it on a daily chart. I'm going to add our simple moving averages, and as you can see, it is bouncing right along the 200-day moving average, and that is really a level of support that it hasn't quite been able to break through and head lower, so we'll have to keep an eye on that. With that, every success, have a great weekend, and we'll be back next week with a market update.